All right, so we're diving into the India Discovery Fund today. I'm really curious about this one, and I'm sure our listeners are too. So is this the right investment for you?
Oh,
That's what we're going to try to unpack today.
yeah, absolutely. It's all about early stage asset light companies in India. Think high growth potential.
Okay, so this is not your typical fund then, and I know they're coming off of their previous fund, IDFI, with a track record that's pretty impressive. But before we get ahead of ourselves, what exactly is IDF2?
Sure. So IDF2 is a SEBI regulated Category I alternative investment fund. More specifically, it's classified as an angel fund. And they're aiming to raise a substantial INR 500 crore with a potential green shoe option to raise another INR 100 crore.
Hold on, green shoe option. You're going to have to explain that one.
Yeah, so a green shoe option, basically. It's a clause that allows them to raise more capital than they initially planned if there's high demand. So think of it as like an oversubscription safety net.
Interesting. So who are they targeting with this fund then?
They're looking for high net worth individuals and institutions who are interested in getting in early with these asset light companies.
Okay, so you keep saying asset light. What does that actually mean for these companies? What does that look like?
Yeah, so think less about physical assets, factories, heavy machinery, big inventories, and more about intellectual property, software, and building networks. So tech companies, online platforms, those are the kinds of businesses that would fit the bill.
Got it. So they're going for agility and scalability over brick and mortar. Makes
Yeah.
sense. Now, how does this asset light approach factor into their overall strategy?
It plays a really big role, by investing in companies that don't require massive upfront capital expenditure. IDF2 is aiming for faster growth and potentially higher returns. They're also really big on diversification, spreading investments across sectors, business models, and even different regions within India.
Smart, not putting all their eggs in one basket. Speaking of spreading things around, what kind of returns are we talking about here?
They're targeting a gross IRR of 25% per year. And what's unique is they offer both equity and structured debt investments.
Okay, so help me understand that. How does that impact me as an investor?
So it means you have the potential to earn dividends from the debt portion of your investment, but also see capital gains when the fund exits its equity positions.
I see. So it's kind of a two-pronged approach to potential returns. Okay, let's talk about the people behind IDF2. You said they're targeting high growth potential, but can this team actually deliver?
Let's start with Ashwani Singh. He's one of the managing partners. And, he hasn't just managed multi-billion-dollar portfolios. His real strength lies in his exit strategies. He's led over 20 exits with returns of 20% or more. That's the kind of track record that gets investors really excited.
Yeah, so he knows how to guide these companies
Yeah.
towards a profitable exit. That's crucial. Who else is on this team?
Milan Sharma, also a managing partner, brings over 20 years of capital markets experience. But here's what makes him stand out. He has a knack for identifying these so-called multi-bagger stocks, the ones that have the potential to multiply in value many times over.
Okay, that definitely piques my interest.
Yeah.
What about the rest of the team? Do they have the same level of expertise?
Absolutely. We have Ashwini Mehra, a founding member of Duff and Phelps restructuring practice in India. He brings deep knowledge of the Indian financial landscape. And then there's Sunil Gurbaksani, a banking veteran who led a 93-year-old bank through a major transformation and helped shape national banking policies. I mean, he understands the intricacies of the Indian banking system, like a few others.
Wow, that's a lot of experience under their belt. Anyone else rounding out this all-star team?
Last but not least, we have Avtar Singh Manga. He brings nearly 4 decades of experience in leadership roles across various banks. But what sets him apart is he's an active angel investor himself. So he understands, both sides of the equation, the investor's perspective, and the challenges faced by early stage companies.
So they've got a mix of financial expertise,
Yeah.
operational experience, and even hands-on investing knowledge. It's a pretty compelling combination.
Mhm.
But how does this all come together in the structure of the AIF? How does it actually connect investors with these companies?
Think of the AIF as like a bridge. Investors like yourself put money into the fund, and the management team, using their expertise and their network, carefully selects and invests in these early stage Indian companies.
So it's not just about pooling money together. It's about leveraging the expertise of this team
Sure.
to make smart investment choices.
Exactly. And what's interesting about IDF2 is that they They offer a level of customization. You can potentially tailor your portfolio based on your own interests and risk tolerance.
So I'm not just along for the ride. I can actually have a say in where my money goes. That's a level of control you don't often see. Tell me more about that.
Yeah, so while the fund managers will still guide the overall investment strategy, they're very open to having conversations with investors about their preferences. It's about aligning your portfolio with your personal investment goals.
I like that. It makes me feel like a more active participant in the process. Now let's talk about timeframes. How long are we talking about before I might see a return on my investment?
That's one of the advantages here they're aiming for. A relatively short exit time frame of just 3 to 4 years. Compared to traditional investments, that might take much longer.
Okay, so potentially quicker returns, but we're still talking about that impressive 25% target IRR, right?
That's right. But of course, we need to address the elephant in the room, risk. Investing in early stage companies always comes with inherent risks. Even with a seasoned team and a solid strategy.
Yeah, that's true. Nobody has a crystal ball. So what are they doing to mitigate that risk, to protect my investment?
Well, it starts with their due diligence process. They're not just jumping on any trendy idea. They carefully evaluate each potential investment opportunity, scrutinizing the business model, the market potential, and the team behind it.
Okay, so they're doing their homework. What else?
They also bring in outside expertise using third-party risk analysis services from major players like PwC and KPMG. And they tap into this vast network of over 500 industry specialized consultants to get, diverse perspectives and insights.
They're not just relying on their internal team. They're bringing in like the big guns.
Yeah. And they don't stop there. They hold regular review meetings with the companies they invest in, tracking their progress, addressing challenges. They're actively involved in guiding these businesses towards success.
So they're not just writing checks
Yeah.
and hoping for the best. They're rolling up their sleeves and getting involved.
Exactly. They even take board seats in some companies.
Yeah.
To ensure that they have a voice in strategic decisions. It's about being an active partner, not just a passive investor.
Yeah, that's what I like to hear. It sounds like they're really pulling out all the stops
Yeah.
to minimize risk. But even with the best risk mitigation strategies in place, they eventually need to exit these investments to generate those returns that we talked about. How do they plan on doing that?
They've got a few different options, including initial public offerings, secondary sales, buybacks, and mergers and acquisitions.
So they're keeping their options open.
Yeah.
And adaptable to the market. And they're aiming for those exits within that 3 to 4 year time frame.
To maximize returns,
Right,
right?
that's the goal.
Yeah.
But before we get too far ahead of ourselves, I think it's worth circling back to IDFI, their previous fund. Best performance isn't a guarantee of future results, but it can be a pretty good indicator of their capabilities.
You're right. So how did IDFI perform? By March 31st, 2024, they achieved a weighted average return of 104.41%.
Wow, over 100%. That's impressive, to say the least. Now, obviously, past performance doesn't guarantee that IDFTO will see the same level of success, but it does show they have a knack for identifying and nurturing winning companies in this space.
Absolutely. It demonstrates their expertise
Yeah.
and their ability to navigate the Indian market.
So IDF2, they already have a pipeline of companies that they're looking at investing in.
They do. And while I can't divulge specifics just yet, I can say they're all early stage, asset light, and innovative companies aligned with the fund's investment criteria and high growth potential.
Okay, so you've piqued my curiosity. What sectors are we talking about here? Can we give me some hints?
Think technology, healthcare, consumer goods, even renewable energy. We're talking about companies that are really on the cutting edge, disrupting industries, and potentially shaping the future of the Indian economy.
Now you're talking my language. Those are some exciting sectors to watch.
Yeah.
Especially in a market like India.
Absolutely. These are companies that are solving problems, creating new markets, and they're really poised for rapid growth.
I'm definitely intrigued. So for our listener who might be thinking, okay, this sounds promising, but what's next? What's the onboarding process like? Is it complicated?
Not at all. Whether you're a domestic or international investor, they've streamlined the process to be really straightforward.
Okay, good to know. Let's start with domestic investors. What's their onboarding journey look like?
First, they need to reach out to the 35North Ventures team, either through their website or by giving them a call. And once they've expressed interest, they'll receive a comprehensive information memorandum that outlines, all the details about the fund, its strategy, the risks involved, and the terms of the investment. It's like a deep dive into the deep dive, so to speak.
So it's like getting the full picture before making any commitments.
Exactly. It's really crucial to read through this document carefully, understand everything, and ask any questions you might have. The team is there to guide you every step of the way.
Great. So let's say I've gone through the information memorandum. I've had my questions answered, and I'm ready to take the plunge. What happens then?
The next step is to fill out the necessary application forms and provide the required KYC or know your customer documents.
Huh.
This is standard procedure for any investment. It ensures compliance with regulatory requirements.
Right. The KYC process, basically verifying my identity
Yeah.
and making sure everything is above board. So once I've submitted all that, what's the final step?
The 35North Ventures team will review everything carefully. And if it follows in order, they'll issue you an allotment letter confirming your investment in IDF2.
Then that's it. I'm officially on board.
That's it.
You are now a part
Of the India Discovery Fund, too.
That sounds surprisingly straightforward.
Yep.
Now, what about international investors? Is the process much different for them?
The initial steps are the same. Reach out to the team, get the information memorandum, ask questions. The key difference is the investment structure. For international investors, 35North Ventures typically uses a feeder fund structure.
Feeder fund. That sounds a bit complex. Can you break that down for me?
Think of it as a separate entity that pools investments from multiple international investors and then channels those funds into the main IDF2 fund.
So it's like a bridge between international investors and the main fund,
Yes.
simplifying things and ensuring compliance with international regulations.
Exactly. So instead of investing directly into IDF2, international investors would invest in the feeder fund, which then invests in IDF2 on their behalf.
Okay, that makes sense. But what does that mean for the onboarding process? For international investors, are there any additional steps?
The application and KYC requirements will be specific to the feeder fund. They might need to provide additional documentation or comply with regulations in their home country.
So a few extra hoops to jump through,
Yeah.
but nothing too complicated, right?
Not at all. The 35North Ventures team is very experienced in navigating international investment procedures, and they will guide investors every step of the way.
That's good to hear. It seems like they've really tried to make the process as smooth as possible for everyone, regardless of where they're located.
Absolutely. They've made it very easy to explore the investment opportunities presented by IDF2.
I like that. It feels very accessible. Now, before we move on, I want to touch on something you mentioned earlier, the customization aspect of the portfolio. Can you elaborate on what that looks like in practice?
Sure. So traditionally, when you invest in a fund, you're essentially trusting the fund managers to make all the decisions. You have very limited control over which specific companies your money goes to.
Right. You're basically handing over the reins and hoping for the best.
Exactly. But with IDF2, there's more agency. While the managers will still, do their due diligence and present a range of investment opportunities, investors can express their preferences and potentially tailor their portfolio to align with their own goals and risk tolerance.
So, for example, if an investor is really passionate about renewable energy, they could potentially allocate a larger portion of their investment to companies in that sector.
That's right. Or if someone is more risk averse, they could potentially lean towards companies that are a bit further along in their development, maybe with proven revenue streams or established customer bases.
That's a really interesting approach. It allows investors to be more involved and really shape their portfolio according to their individual needs.
Exactly. It's about empowering investors and giving them more control over their financial future.
I love that approach. Okay, we've covered a lot of ground here, from the basics of the fund to its strategy, the team, risk mitigation, onboarding, and even the impressive performance of their previous fund. But now I'm curious, what stands out to you as the most compelling aspect of IDF2?
For me, it's the combination of their laser focus on a high growth market like India. Their commitment to asset light companies
Yeah.
that are poised for rapid scaling, and the unique level of portfolio customization that they offer. It's not every day you find a fund that ticks all those boxes.
I agree. It's a unique combination. And for our listener, I think the key takeaway is this. Given the potential of the Indian market, the experienced team behind IDF2, and their commitment to both managing risk and empowering investors, how might an investment in this fund align with your personal investment goals? It's a question worth pondering as we head into our next segment. We'll take a closer look at how this AIF actually works in practice.
So to really understand how this all works, 35 North Ventures has actually provided us with a visual aid,
Yeah.
a diagram that shows how the AIF structure connects investors to these promising companies.
Oh, I love visuals. It's like getting a behind-the-scenes look, the mechanics of the fund. So what are we looking at?
So on one side of the diagram, you see the investors, both domestic and international, and their investments flow into the India Discovery Fund, which is managed by 35 North Ventures.
Okay, so 35 North Ventures is like the engine of the operation, making the investment decisions based on their expertise and the fund strategy.
Exactly. And on the other side of the diagram, you see the fund's investments flowing into various early stage companies. These are the businesses that the fund believes have that high growth potential we've been talking about.
Right, so the AIF acts as a conduit, linking investors with these opportunities they might not have access to otherwise.
Exactly. And remember, with IDFT's level of customization, investors can actually have a say in the types of companies that the fund invests in. It's all about aligning your portfolio with your interests and risk tolerance.
Okay, we've covered a lot about IDF2, the team, the strategy, the potential returns. But there's one thing I keep coming back to. Risk.
Yeah.
Especially with early stage companies. No matter how promising they seem, there's always a level of uncertainty. So how does IDF2 address this?
Yeah, you're right. Risk is an inherent part of any investment, especially in this space. But IDF2 has a multi-layered approach to managing that risk.
So we talked about due diligence, bringing in outside expertise. What are some other ways that they're protecting investments?
Well, I think their active involvement with the companies is key. Remember, they're not just providing capital, they're taking an active role in guiding these businesses towards success.
Right, taking those board seats gives them a direct voice in strategic decisions.
Yeah.
But they're doing even more than that, right?
They go beyond just having a seat at the table. They act as strategic partners, helping companies refine their business models, explore new markets, and really navigate the complexities of the business world.
So they're actively working to increase the chances of success, which ultimately benefits the investors. It's like having a team of experts in your corner.
Exactly. Another crucial element is diversification. By spreading investments across sectors, business models, and even geographic locations, they're reducing the impact of any single company's performance on the overall portfolio.
Makes sense. So even if a couple of companies face challenges, other investments can potentially balance things out.
That's the idea. Diversification is a classic risk management strategy used across, various investments, and it plays a critical role in IDFT's approach.
So we've got active involvement, strategic guidance, and diversification all working together. What else is in their risk management toolkit?
Well, their extensive network of professionals is a major asset. Remember those 500 industry specialized consultants we mentioned? They really tap into that network, along with the expertise of their own management team, who have decades of experience across various sectors.
It's like having a brain trust at their disposal.
Exactly. They're gathering different perspectives, analyzing data, considering various factors before making any investment decisions. It's a very thorough approach.
It sounds like they're really committed to managing risk responsibly, which is definitely reassuring.
Right.
But eventually those investments need to be exited to generate those returns. Can you walk us through their exit strategies again?
Of course. So IDF2 has a range of options: initial public offerings, secondary sales, buybacks, and mergers and acquisitions.
So they're flexible and adaptable, using the best strategy for each company based on market conditions. And their targeted 3 to 4 year time frame gives them the flexibility to adapt and maximize returns.
Exactly. Speaking of which, it's worth highlighting the success of their previous fund, IDFI, that 104.41% weighted average return by March 31st, 2024. speaks volumes about their capabilities.
Absolutely. Past performance isn't a guarantee, of course, but it does provide a glimpse
Oh.
into their expertise and their ability to deliver results.
And remember, IDFI focused on the same type of companies:
Mm.
early stage, asset light, high growth potential in India. So their success in that space is a really positive indicator for IDFA.
Okay, so we've covered a lot of the mechanics of the fund, but what I'm really curious about now are the companies themselves. What kinds of businesses are they looking to invest in?
Well, IDFI already has a pipeline of companies that are open for investment.
Okay, I'm on the edge of my seat. Give me some hints about what kind of companies are in this pipeline.
I can't divulge specifics just yet, but I can say they're all aligned with the fund's focus. Early stage, asset light, innovative businesses with high growth potential. Think sectors like technology, healthcare, consumer goods, and renewable energy.
Wow, those are some sectors that are really taking off in India. We're talking about companies that are at the forefront of innovation, disrupting industries, shaping the future.
Exactly. These companies are solving problems, creating new markets, and they're really poised for rapid growth.
Okay, now I'm really intrigued. But for our listener who wants to explore these opportunities further, what's the best way to learn more?
The 35North Ventures website is the place to go. They have detailed information about IDF2, including the onboarding process for both domestic and international investors.
Perfect. We'll make sure to include a link to their website in the show notes. Now, before we wrap up this segment, I want to circle back to the customization aspect of the portfolio. You mentioned it earlier, but can you elaborate on what that looks like in practice?
Sure. Traditionally, when you invest in a fund, you're trusting the managers to make the decisions. You have very little control over which specific companies your money is invested in.
Right. You're essentially a passenger, hoping the driver knows where they're going.
Exactly. But IDF2 offers investors more agency. While the managers will still do their due diligence and present opportunities, investors have the chance to express preferences and tailor their portfolio to align with their goals and risk tolerance.
So if someone's passionate about renewable energy, they could allocate more of their investment to those companies.
Precisely. Or if someone is more risk averse, they could focus on companies that are a bit further along in their development with proven track records.
That's fantastic. It empowers investors and allows them to create a portfolio that really reflects their individual needs and values.
Exactly. It's about aligning your investments with your personal vision for the future.
I love that. Okay, we've covered a lot of ground here. We've explored the AIF structure, delved into risk mitigation strategies, and even peeked into the exciting world of the companies in their pipeline. But now I'm curious, what stands out to you as the most intriguing aspect of IDF2 so far?
For me, it's their commitment to
Mm.
transparency and investor empowerment. They're not just offering an investment, they're inviting you to be a part of a journey. They're sharing information, welcoming dialogue, and giving you the tools to really shape your own investment experience. That's what truly sets them apart.
I wholeheartedly agree. It's a refreshing approach to investing. Now, for our listener, I think the key takeaway is this. IDF2 is more than just an investment opportunity. It's a potential partnership, a partnership with a team that's not only committed to generating returns, but also to empowering you on your investment journey. It's something to think about. As we move into our final segment, where we'll explore the onboarding process in detail for both domestic and international investors. Okay, so let's get down to the nuts and bolts. The onboarding process for IDF2. It's one thing to hear about this exciting opportunity, but how do you actually become an investor?
Yeah, it can seem a little daunting, but 35 North Ventures has made it pretty straightforward for both domestic and international investors.
Well, that's good to hear. Let's break it down. Let's say I'm an investor based in India. What's my first step?
Your first step is to reach out to the 35 North Ventures team. You can find their contact info on their website.
Easy enough. I shoot them an email, give them a call. Let them know I'm interested in IDF2. What happens next?
They'll send you a comprehensive information memorandum, which outlines everything about the fund: the investment strategy, the risks involved, the terms and conditions. It gives you all the granular details.
It's about getting informed.
Yeah.
Making sure I understand what I'm getting into.
Exactly. Read through it carefully. Ask the team any questions you might have.
Okay, great. So I've gone through the information memorandum. I've had all my questions answered, and I'm ready to take the plunge. What's next?
Then you'll need to complete the application forms, and provide the necessary KYC documents. Know your customer. This is standard for any investment. Ensures everything complies with regulatory requirements.
Right, the KYC process, proving my identity, where my money is coming from, all that good stuff.
Precisely.
So once I've submitted all that, what's the final step?
35 North Ventures will review everything, and if all is in order, they'll issue you an allotment letter, confirming your investment in IDF2.
And that's it. I'm officially on board.
You're officially on board.
Wow, that sounds pretty straightforward. Now, what about investors outside of India? Is it more complicated for them?
The initial steps are the same. Contact the team, get the information memorandum, ask any questions. The key difference is the investment structure. For international investors, 35 North Ventures typically uses a feeder fund structure.
Feeder fund, okay. I've heard that term before, but I'm not entirely sure what it means.
Think of it as a separate legal entity that collects investments from multiple international investors and then channels those funds into the main IDF2 fund.
Ah, okay, so it's like a streamlined pathway for international investors to participate in the fund and make sure everything aligns with international regulations.
Exactly. So instead of investing directly in IDF2, international investors invest in the feeder fund, which then invests in IDF2 on their behalf.
Okay, that makes sense. So what does that mean for the onboarding process for international investors? Are there any additional steps involved?
The application and KYC requirements will be specific to the feeder fund. They may need to provide additional documentation or comply with regulations in their home country.
So a few more hoops to jump through.
Yeah.
But nothing too overwhelming, I hope.
Not at all. The 35 North Ventures team is very familiar with international investment procedures. They'll guide investors through each step.
Well, that's good to hear. It sounds like they've really made the process accessible for both domestic and international investors.
Absolutely.
Well, we've covered an impressive amount of ground today. We've explored IDF2 from top to bottom, talked about its unique focus, its impressive team, its comprehensive approach to risk management, flexible exit strategies, and the onboarding process for both domestic and international investors.
It's been quite the exploration.
So as we wrap up this deep dive into IDF2, I want to leave our listeners with this. We've talked about the potential of this fund, the expertise of the team, the opportunities in the Indian market. But the real question is, how does this align with your investment goals and aspirations? We've given you the information, the insights, and the tools. Now it's time to explore how IDF2 fits into your vision for the future.
And remember, exploring the possibilities is just the beginning. If IDF2 sparks your interest, reach out to the 35 North Ventures team. They're ready to answer your questions and guide you on your investment journey.
This deep dive has been just that, a dive into the depths of this investment opportunity. But the real exploration starts now. It's time to take the plunge and discover what the future holds.